Sunday, November 3rd, 2017, Monaco 64, home of alternative economics and contrarian views. I want to look at the technical picture for precious metals, gold and silver, and also for the currencies, the fiat currencies, that is, not the cryptocurrencies. Look at the dollar index, the euro, and the Japanese yen. The charts, kind of eliminate the emotion. I know, the surge in cryptocurrencies have kind of frustrated precious metals investors of late. I think, cryptocurrencies are here to stay. I'm not saying they're going to take over everything, but they have a place in the future of, the financial markets and precious metals as well. Precious metals have been around through, all kinds of technological advances in the last 5,000 years, and they're still valuable in my opinion. So let's start out with gold. Excuse me. I've got a year-to-date chart in gold, and I've put some moving averages on it, and also I've done the retracement from the last big move higher we had. The green line is the 200-day moving average, the red line is the 100-day, and the black line is the 50-day. Not a good sign, I guess, the 50-day going below the red, but we're still above the 200-day moving average. The other thing you'll notice is that from below at 1205 earlier this year to the high at 1357, we're basically, for the last couple of months, we've been basically trading between that, the golden mean, the 38.2% retracement and the 61.8 retracement, with the 50% retracement right bang in the middle. So it actually, gold is going nowhere. So it's actually not negative technically. So at least we know where to look, to see, if gold breaks below 1263, 1260, then, unfortunately, we'll probably see more selling in the paper market, not in the physical, in my opinion, because I don't think precious metals, gold bugs or silver stackers are actually selling when these price moves happen. And on the upside, of course, it looks like 1300 is the line in the sand. So it's very easy to see. It's basically 1260 to 1300. Those are the parameters. So that's gold. So let's have a look at silver. Silver had a rough week last week, just like gold, and it's way below those moving averages. Of course, the green is the 200-day, the black is the 50-day, and the red is the 100-day. But just like gold, from the recent low to the recent high, we've been basically stuck between the 50% and the 38.2% retracement, maybe a little bit above it. But we've held at 61.8. We closed at 61.41. So silver also, doesn't look good, but it's still holding fairly well, and it could very easily go up, back up to 17. So that's silver. So let's have a look at the dollar index now. And don't forget the dollar index, the majority of the weighting of the dollar index is the euro. So dollar index as well, just a simple chart here, also year to date. We can see it's been going lower. The trend is down. We've had this, correction since the beginning of September. And now, as you can see, it looks like, this is a clear head and shoulder formation. We need to break basically below 92.40 That's where the neckline will be roughly, maybe a little lower this week. So that's the dollar index there. Let's look at the euro, which is basically almost like a mirror reflection of the dollar index. And euro as well has been trading up all year from around 105 to almost 120 now. And we've had a correction like the dollar index since the beginning of September. And we've got an inverse head and shoulder, and we're actually above the neckline. So the euro is looking pretty good as well. And now let's look at the currency that's basically probably keeping gold and silver down, even though like the euro has been going up against the dollar, and so has the pound. I'm not going to look at the pound today, but it's the yen, Japanese yen. I've talked many times about the relationship between the dollar yen and gold. Yen has been a carry trade currency for many years. What that means is that as the Japanese yen market is a very liquid and big market in foreign exchange, investors, speculators, they borrow in yen because you can borrow for nothing in yen, sometimes even negative. They take the proceeds in dollars and, you know, they buy risky assets. So a weaker yen or a stronger dollar is good for riskier assets. You know, stock market, not so good for gold. Of course, since the beginning of the year, the dollar has been going down against the yen. You can see we were above 117.50 and now we're at 112.12. You know, and that has helped gold. Gold is up on the year, but in the last week or so, the dollar had broken below that that upper trend line, and gold was doing quite well. And then they got the dollar to go back up above that trend line, with the yen weakening. And that's why we saw gold have a tough time. So it looks like we're trying to form a little head and shoulder there also in the dollar yen. And we need to break back below 112 in the dollar yen. And that would help precious metals get some more semblance of positivity. So yeah, that's the currencies, technical picture. Interesting markets on Friday. I went to play golf on Friday in the morning, and at one point in the afternoon I looked at the markets. They're doing the usual stuff, afternoon London of course. Then all of a sudden I looked and the Dow was down like 200 points, and I said, what's happened? I'd come home to change to go back to the golf club for dinner, and my wife told me about the news, about the Flynn news, and that happened to be a complete fiasco. ABC basically made up a story saying that Flynn had contacted the Russians while Trump was still a candidate, and ABC had to retract that. The story should have read that Flynn contacted the Russian authorities while President Trump was president-elect, which is something completely normal. And I saw that the Dow actually went down 350 when that ABC story came out, and it only finished down 40. And then we had the tax, the new tax reform was voted through the Senate. We'll have to see what happens tomorrow on Monday. The next big thing, of course, is December 13th, which is when the Fed is expected to hike interest rates by 25 basis points. And I guess we're going to have, gold could stay under pressure for the next 10 days because of that. We've seen in the last few years, whenever the markets are waiting for the Fed to hike, gold and silver tend to be under pressure. But we never know. with these markets. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet, and you can also follow me on Twitter and on steemit.com. And I'll talk to you later. Bye.